What's going on, everyone? So we had a crazy day today in the market with the interest rate decision and everything. So we're going to try and break some of that data down, along with some of Jerome Powell's comments today, and we're going to try and determine where to look forward. All right. So interest rate decision. Why 75 instead of the full 100 basis point rate hike? Well, you can look at this multiple ways. You could the 100 basis point rate hike would be front loading, seriously. So you could do a major front you'd be major front loading here for a couple of months, but of course the Federal Reserve went with the 75 rate hike. So why is that? Well, inflation doesn't seem like it's going to be cooling down anytime soon. We're still paying for for the pandemic and everything, along with Russia and Ukraine still taking a toll really on inflation. We're about to head into the winter months. Everything's about to start getting even more expensive than it already is. So the Federal Reserve most likely voted on the 75 rate hike just mainly because they can go longer with that rate hike than they can with 100. So we went with the smaller rate hike today. So why did the market tank? Well, normally you would think, well, if you went with the smaller rate hike instead of the bigger one, since rate hikes normally pretty much tank the market, the smaller one would pretty much be bullish for the short time. Well, that would be true except for the federal funds rate for the first year. It previous was at 3.8%, and this month they came out with it at being 4.6% for the first year. This just goes to show that they're going to be rate hiking longer than they expected. Powell actually said today that they would continue to rate hike until the end of 2024. That's very bearish, and that's actually why you saw the market tank. Means that we're just going to be rate hiking longer. Inflation obviously hasn't peaked, and it's just going to cause more and more problems to the economy, and they're just going to keep up that high rate hikes. So, what are my views on Powell? Jerome Powell came out, and he didn't really seem as nervous as some previous interviews, though. Now, he stayed with this pretty much the whole Jackson Hole statement and everything. He's going to continue. They're going to continue rate hiking and continue the work until it's done. This is a very hawkish sense. Very bad for the market. Very good for the economy as the Federal Reserve's finally taking interest and finally putting their foot down. But could be possibly a little bit too late. Could be heading for a recession. So looking forward, we have some Powell's comments that really caught my eye today. First one is we continue to see inflation risk as being skewed to the upside. This just kind of just shows last month we thought inflation peaked with the CPI data and PCE data being lower than expected. The market ran really good. We were all being very optimistic. We were looking for that soft landing being a lot more plausible. Now it's not, of course, but this month CPI reading was, we obviously know that gasoline prices are still going down, yet inflation's going higher. So we know inflation hasn't peaked, and that Goldilocks setup really isn't looking as possible anymore. So another comment he made was since Jackson Hole, my main message has remained the same. Like I said in the previous slide, of course, he's going to be remaining this very serious demeanor here, because mainly the Federal Reserve's kind of been under scrutiny lately because they kind of dropped the ball, in my opinion. They didn't jump on inflation soon enough, and while the economy and numbers were a whole lot better than they are now, they should have rate hiked a lot faster and front loaded it, in my opinion. We wouldn't even be really here where we are. Of course, we also have macro environment things causing problems on inflation, like the Ukraine and Russia war and everything. And we're still obviously battling from the COVID-19 pandemic and everything. So he also said soft landing is incredibly difficult, and no one can predict whether it will result in a recession or how severe it would be. This is just basically the Federal Reserve just saying they're not going to predict the future, because the last prediction that they had that inflation was transitory obviously went to crap. So this prediction is pretty much no prediction. They're just going to go day by day and go with the data. And then the last one says, no one knows if we will have a recession or how severe it will be. Have a typo in severe, so I apologize for that. But this just kind of goes with the last bullet point. Of course, they're not going to be making any more predictions. They're just going to go data by data, day by day. So expect that good news is bad news and bad news is good news to continue from here on forward. As if we have anything that hurts the economy, expect it to possibly be a little bit bullish for the market, just because it puts more pressure on the Federal Reserve and makes them possibly in November for the next rate hike bring it down even more, because these high rate hikes are possibly hurting the economy a little bit harder than it is. Now, just looking at some technicals real quick, we noticed that the SPY put wall has actually dropped from 390 to 375. This is a very bearish sentiment, and since all this news came out and everything today, the federal funds rate, we saw the market pretty much tanking into close. Now, we also closed that gap fill around 380. We saw a little bit of a bounce around this level, but it didn't hold very long, and of course, the panic selling and everything pushed down. Now, futures are down almost 1% right now, so we could very well see a pretty big gap fill, a gap down in the morning. But so we possibly, depending on how the market sentiment and everything, and how big hedge funds and investors kind of digest some of this information, we could possibly fill a gap fill short term upwards. So expect high volume tomorrow, as the hedge funds, investors, and everything are going to continue to be playing these, and expect a little bit of volatility to be a little bit lower tomorrow. Don't expect the high giant whipsaws like we did today or yesterday, as the uncertainty in the market is a little bit over. Everybody knows what the data is now, and everybody knows what to expect. So we could seriously have some pretty good intraday swings. Now, I sold a lot of my long-term put positions today, so I don't have any current positions. I'm kind of waiting on how the market reacts tomorrow. I will play intraday, but my personal sentiment long-term is very bearish, depending on where inflation goes from here. But just basically based on that speech that Powell and the Federal Reserve kind of gave today and everything. So if you like this video, please don't forget to like and subscribe. If you follow my daily posts, I will go ahead and continue to let everyone know that if that put wall moves or anything. Call wall is still up at 430, but that really doesn't mean much right now with that put wall going down, even more bearishness. So everybody have a good rest of your night, and I will be coming out with a weekly video update this weekend, so be looking out for that.